All right, let's get right into it. The date is Wednesday, March 18th, 2026. And you need to pay attention because today is a huge day for global markets. I mean, everything is about to come to a head.
So what's the backdrop for all this? Well, it's tense, to say the least. We are now on day 19 of a pretty serious conflict, and believe me, that geopolitical heat is just getting dialed up by the hour.
And if that wasn't enough, layered right on top of it, today is the biggest macro day of the entire week. This is the one day that's been circled in red on every trader's calendar for months.
Why? Because tonight you've got these three massive, competing forces that are all about to slam into each other. We're talking about the world's most powerful central bank, a rapidly widening energy war, and a flat-out revolution happening in the tech market.
Okay, so let's break down that first force, the Federal Reserve. Now, the main event tonight, it kicks off at 8 p.m. Central European time. But here's the thing, the real story, the one you actually need to care about, isn't what's grabbing all the headlines.
See, you might think the big news is the Fed's interest rate decision, but honestly, it's a total non-event. The market has this completely baked in. We're looking at a 93% probability of no change. So yeah, the real action is happening somewhere else entirely.
Right. So like I was saying, the rate hold itself, that's not the story. The information that the market is absolutely desperate for is buried a little deeper. And that deeper part is something called the dot plot. So what is it? Think of it as the Fed's internal forecast. Each committee member anonymously puts a dot on a chart showing where they think interest rates are headed. And what makes this one so important? It's the very first dot plot we've gotten since the war started and since oil prices just went parabolic.
And that brings us to the absolute central question of the night. You see, back in December, the Fed's own projection showed one rate cut happening this year. Tonight, the entire market is basically holding its breath to see if that projection changes, from one cut to zero. The question is, has this oil shock finally forced the Fed to get even more aggressive?
You can see how this puts the Fed in an incredibly tight spot, right? I mean, this inflation we're seeing, it's not because the economy's too hot. It's an oil supply shock from a war. So if you hike rates into that, you could absolutely crush an already fragile economy. But if the dot plot comes out looking aggressive anyway, you just know the bond markets are going to get spooked and sell off hard. It's why every single word from Chairman Powell about oil, whether he calls this whole thing transitory or uncertain, is going to be absolutely critical. Okay. Let's shift gears to the second major force in this collision, because it all builds from here. That oil shock the Fed's trying to figure out, well, it's not getting any better. In fact, just this morning, Iran reminded everyone in no uncertain terms that this war isn't winding down. It is actively and aggressively widening.
I mean, just look at this number, 20%. Yesterday, Iranian drones hit the Shah gas field in Abu Dhabi, and that one single strike took 20% of the UAE's entire gas supply offline. Let me be clear, this wasn't some warning shot, this was a direct, calculated hit on critical energy infrastructure.
And you have to understand, this is not an isolated incident. The strategy here has clearly shifted. First, it was a tanker. Then drones hit an Iraqi oil field. Then the Shah gas plant we just talked about. And now the Fujairah oil zone. It's a pattern. Iran isn't just threatening the Strait of Hormuz anymore. They are systematically attacking the entire upstream energy supply chain.
So how's the market reacting? Well, exactly how you'd expect. Brent crude is already back above $102 a barrel, with WTI hovering around 95. That war premium in the price of oil, the bit that had started to fade last week, yeah, it has come roaring back.
And just to add another layer of extreme uncertainty to all of this, get this. Iran's supreme leader, Mujtaba Khamenei, hasn't been seen in public for 19 days. Think about that. A leadership vacuum at the top of a nuclear threshold state in the middle of a hot war. That is not exactly a recipe for lower oil prices.
But, and this is what makes today so fascinating, against this grim backdrop of war and economic uncertainty, there is a third, incredibly powerful force pulling in the exact opposite direction, the AI boom. And man, it poses a trillion-dollar question. $1 trillion. That's the new number being tossed around for the AI infrastructure spending cycle. And this comes right after a major keynote at a tech conference on Monday that just completely electrified the market. The whole narrative around AI spending isn't just strong, it's literally accelerating right before our eyes.
So this is the gut-wrenching choice that every single fund manager is facing right now. What do? Do you trust this incredibly powerful AI story and just hold on to your tech positions through all the chaos tonight? Or do you play it safe, de-risk, park your money in cash, and just wait for the geopolitical dust to settle?
And that really gets to the heart of it, doesn't it? Today is a massive stress test. We are literally about to find out if this huge AI infrastructure story is strong enough to power through a more aggressive Fed and an escalating war. Or does macro fear always win in the end?
So you've got these three massive forces all converging on a single night. It's a lot to take in. So let's boil it down. Here's exactly what you need to be watching as all of this unfolds.
Okay, first, at 8 p.m. CET, all eyes on that dot plot. Does the median forecast shift to 0 rate cuts? Because if it does, watch out for bond yields to spike. Second, how does oil react from here? Are these attacks now going to be priced in as a permanent structural risk? And third, this is a weird one, but keep an eye out for any proof of life from Khamenei in Iran. If he shows up, that could change the dynamic instantly. But if the silence continues, well, that implies something far more unpredictable is going on.
So just as a quick snapshot, here's where things stand right now as we head into the main event. Gold, your classic safe haven, is sitting near $5,000. Oil is obviously elevated, with Brent over 102. And Nvidia, which is really the bellwether for this whole AI trade, is holding steady around $183 a share.
You know, this powerful rotation into AI tech, it really only just kicked off on Monday. But today, this collision of geopolitics and central bank policy is putting that entire, brand new narrative under maximum, and I mean maximum stress.
The Fed's next move, the market's reaction to this escalating war, and the resilience of the single biggest theme in technology. It's all on the line. Everything happens tonight.